Hello everyone, myself Vaibhav. In today's session of Market Movers, we will be focusing on the continued strength which we are observing in the US dollar. I will be shedding light on some of the underlying reasons also why the picture is not likely to change anytime soon, and we will more likely than not see the continuation of the upward trajectory for the US dollar against its most of the major peers, and we will of course try to see what are the price levels which can come handy if we want to capitalize on this situation and look for some trading opportunities in today's session as well as in next couple of sessions. So let's get started with look on the trading context for the day. The data which we got in today's session has been on the positive side, means relatively speaking, both for the European area and later on for the US. The economic releases were on the upside compared to the prior numbers, and going back to the European trading session, we had this GFK consumer confidence data, and it has also now improved to almost 5 months best, and it is still in negative territory at minus 6.2, but it has almost halved compared to the prior reading of 12.7. So that's a significant turnaround there in people's confidence while going for shopping. Moving on to the US trading session, we got these GDP numbers, and these are final numbers and revised for the fourth quarter of 2020. And here the figures are quite solid as were the expectation, but the significant thing is that it has been revised further on the upside at 4.3% compared to the 4.1% as per earlier estimate. And at the same time, the initial jobless claims were also released for the week ended 20th of March, and these claims now stand at the lowest it has been since the pandemic began. So you can say that to some extent, the effect of pandemic is now kind of subsiding, not totally or not to large extent per se, but at least to some extent it is returned to a normalcy, and the things are likely to only get better from here. So we can say that worst is now behind us, and we can look forward to better days ahead. Now let's shift our attention to the technical aspects of USDJPY first, and then we will also consider the gold. The theme of the day is strength of the dollar, and from that perspective, we will see what are the likely opportunities which can come our way if we keep in mind some key levels. So let's get started with the USDJPY's technical outlook first. This is the daily time frame chart, and from the chart you can make out what a rally it has been for the USD JPY, and even after rallying almost 600 pips, we didn't really see significant correction in the USD JPY, and instead of a significant correction, even after this long consolidation of almost 2 weeks, the USD JPY is further picking the pace on the upside only, and it looks likely that if these prior swing highs are reached, the 1010 the 110 is pretty much likely in just a matter of couple of days. So we will have to get ready for that eventuality if it comes to pass, and we will see some of the levels which are going to be crucial if we have to look for trading opportunities in these circumstances. So on the higher side, we do have the resistance in place around this prior swing high. This is the price area around 109.2 where the USD upside has been capped. And today also we have seen that after rallying from these lows, we have seen the USD JPY again struggle closer to this prior swing high area, and if that is breached, we have the third resistance of this month's pivot point series. So the gains are likely to be muted, but I think the trajectory is, of course, now firmly in place for the upside momentum, and The trade which are likely to bring profit are most likely to be on the long side. So we have to keep these circumstances in mind while expecting the continuation of the rally. But the time it might take for USDJPY to breach these swing highs is an open question. We can't really say if it is going to happen today, or it might take a couple of days, or even if in a worst case scenario it might not really see a breakout, and after struggling here it can even reverse the course. But for the time being, the possibility is largely in favor of the possible breakout on the higher side. And for that, we will look out for some of the levels, I think, which can cut down on our stop loss and make our risk fairly low. If you consider both these technical parameters, both are pointing to the overbought situation, but the underlying momentum is on the bullish side. The pivot point series as well as the regression curve are in consolidation phase with upward bias. And if you consider this regression curve after this sloping of upward slope of upward, it has flattened to great extent as the price action had gone sideways for more than 2 weeks. And now, as the price action is again picking up some momentum and entering these upper band of this regression curve, I think it is likely to maintain the trajectory in a sideways manner, and we might not really see significant inclination towards the downside if the price action remains in the upper band. But if it fails to hold closer to this resistance zone, then I think the technical parameters are likely to shift, and we will see the flattening giving way to steepening, and it might happen on the lower side. But for that, the key is going to be the immediate price action, and we will have to see how it unfolds. And in near term, the levels which we need to watch out for is of course going to be closer to 109 on the lower side. Here we had 200 resistance, 200 SMA as a resistance in place around 108.9, and that's where yesterday the first attempt was made. It failed. We saw this reversal, which took the USDJPY closer to this prior swing high, the 50 SMA area also, and from there it got the fresh impetus, and eventually it has now broken above it. And I am expecting this is the price area which is likely to act as a decisive marker for the USD So as long as price action is holding above it, I think we can be fairly hopeful of the continuation of this upward trajectory. And from that point of view, it will be better for us to go for the buying opportunities as and when we see the USD closer to this support area. So that will help us in minimizing the losses in case we happen to be on the wrong side of the trade. And in market, nothing is ever certain. So we do have to keep in mind the stop loss levels, and for that we can use the confluence area of these 50 and 100 SMA, which is there around 108.8. So if we are going in for the buy trade anywhere above these 108.9, we will have to keep these as a possible stop loss. And on the higher side, the immediate target, if you are looking for scalping opportunities, then the target can be kept closer to the immediate high around 109.3. And if you are looking for swing trade opportunities, then I think you can even target the possible breakout, and in that case your target can be kept quite closer to the 110. But that is likely to take some time, and we will have to see how that unfolds. But scalping opportunities, I think, are likely to bring in immediate profit in a day or two, and we are more likely than not to see the price getting closer to 109.3 in USD Now let's see what's happening in the gold. Here the strength of dollar is being also reflected, and the chart is inverse of the USD JPY as the dollar has gained strength, the gold prices against dollar have gone down, and this has been a phase of consolidation for the gold where it has traded in a very narrow range in the price band of 1,720 USD per ounce on the lower side to 1,750 USD per ounce on the higher side. Even in today's session, after these sharp moves in both the sides, we have seen the price range holding intact. It didn't really see any significant breakout, and I think moving forward also this breakout is going to be crucial, and the price band, if it's broken then only we will see significant move, and the possibility of the dollar sorry the gold moving on the lower side is looking a lot higher. If we consider this regression curve, it has now inclined to slope on the upside, but we have to keep in mind that price action has now entered into the lower band of this regression curve, and if that remains the case, then we will see eventual flattening of this regression curve. If we consider another technical parameter of pivot point series, then we do have to see that it is going to offer the resistance on the higher side closer to the central pivot point area around the price band of around of 1770 USD per ounce. Right now, that looks far away, and the price action is mostly unfolding while caught in between these resistance on the higher side and support on the lower side. This support indeed provided some buying momentum last time around. So this time around, it will be interesting to see how it behaves. But for the time being, that's not really into play. And given the fact that dollar has continued to gain strength, I think we can be betting on the possible breakout on the lower side and eventual decline towards this support area, which is there around US dollar 1680 per ounce. So if we want to capitalize on that, there are some key levels which we need to watch out for, and of course we will need a breakout from these price band, which has been the case for almost more than a week now. In today's session, as you can observe, the price range provided the support on the lower side and then the resistance on the higher side. And if we want any profitable trading opportunity, I think we will need a breakout on the lower side below these immediate support. And if that does happen, then I think we can utilize this confluence area of the 50, 100, and 200 SMA as our possible resistance area. Possible stop loss can be kept about just little above this confluence area, and for that we will need a breakout on the lower side below these US dollar 1725 per ounce mark, and the stop loss then can be kept closer to this confluence area anywhere in the vicinity of US dollar 1735 per ounce. So we will have to wait it out and see how the price action evolves from this range, and it will be better to wait it out for the possible breakout rather than looking for trading opportunities straight away. And I am betting more on the break on the lower side than on the higher side. Of course, anything can happen, but if we do get the breakout on the lower side, then only we should be looking for shorting opportunity while keeping the target price anywhere closer to the price level of around US dollar 1700 per ounce. So the risk reward ratio will also good enough, more than 1 is to 2, I guess. And if things continue to go our way, we can even keep partial positions open for the retest of price level of prior swing low around US dollar 1680 per ounce. So that is my take on the gold's technical outlook. And if any of you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you next time. Till then, goodbye.